Welcome back, everybody. And hey, the question is, are sales, well, in the proverbial dump on a historic level, or is our market a little bit different than the national level? Let's go into that. We'll talk a little bit more about that and what's going on. Hang on. Okay, so here's the question. On a national level, they're saying that, basically, pendant sales are kind of in the basement. Well, they're in the dumps. Not really, because pendant sales are absolutely lower. Inventory's been lower, although we've been seeing a few different metrics that's saying that it's improving. So if we take a look at our chart here, you can see where we have pendant sales in 2020 versus 2019, where they hit the dump. Not uncommon. It is a seasonally normal as we were heading into, quote unquote, a recession in 2019. But we spiked again in 2020 and 2021. Well, because, interest rates came way down. Here's the funny thing. That's a national level. So now let's take a look at what's going on our side on a bigger scale. First, let's take a look at some of the newest reports. As inventories expand, as new home sales continue to fall. That is part of our discussion today. Has the home price slide ended? Well, technically, we're not sliding downwards, and we're going to talk a little bit more about that. Mortgage applications not impressed by low rates, and that is also a true statement. And what's going to be super interesting is we're going to start to see some continued volatile numbers. And it's funny because this is our seasonally slow time. Now, we are heading into the July 4th weekend, which means that we're going to see buyers, well, mentally, going to go on vacation. Why? Because they even get a great week this week because July 4th falls on a Thursday. Okay, so that means that most people are taking off Friday, and then they get Saturday, they get Sunday. So you get a full 4-day weekend, not a 3-day weekend. And some folks, well, they're probably going to kick out on Wednesday and make it a big hoopla. Anyway, however, after July 4th, buyers come back pretty aggressive, and they will do so until about mid-August. Why? They want to get situated. They're kind of acclimated to the summer, and they're going to want to have that home for the winter and the holidays, and kids getting back in school, so they want to have that home secured. And there's a lot of different reasons, but that is a normal uptick that we will see mid-August. Last minute vacations. We have Memorial Week, Labor Day weekend, and then of course we have kids getting back in school. And again, it will take that slowdown until the end of September. So it's our traditional vacation trifecta. However, we're going to see a spurt here coming up. Now, interest rates traded publicly, they're doing some pretty crazy things. So when we hop back into this and we look at, is the industry, are the rates going to start coming back down? Or like what Freddie's seeing here, which is a delay because this is the running 7-day average. Like Friday, we saw a bump in rates because of some of that volatility that we're seeing out there. And there's a variety of different reasons. But Wednesday, we're going to have a new report, and that is going to be super important for you guys to watch as we take a look at our cost price index, because some of the Feds, not all of them, but the key Fed members are saying, hey, listen, some of the international markets which affect us, like Japan right now, they actually took a 1% increase in their treasuries because, like what we did in 2020 and 2021 and part of 2022, where the government basically artificially held down rates. Japan has been doing that for a long time. Well, because they are also a major debt holder of U.S. debt, they are now starting to see some of the inflation numbers that we started to see. Their treasuries kicked up, which means that their mortgage are going to start kicking up, just like they do with us, because the two follow each other very closely. So it will be interesting because if we can get our treasuries to fall in value, since the dollar is at a historic high against the yen, sorry about that, then we will actually see some rate improvement. And I think that might be, well, as we get closer to election, we're going to see some crazy things. But getting back to the Feds could very well actually start to do a little bit of a drop in rate. Now, remember, the Feds have nothing to do with mortgage rates. Those are publicly traded, but they can affect mortgage rates. That will be super important. And the biggest people that will benefit are your credit cards, your HELOCs, your what banks lend to each other. And more importantly, when we talk about commercial lending, that will ease some of that pain for some of the commercial real estate out there, which those are the folks that are in a wee bit of trouble. Anyway, moving on. So if we go and we take a look at what's going on the scale of, hey, what's going on in the market, you can see on this chart on the left-hand side, that's actual days on market. And you can see January's, those are numbers that, homes stay on market longer. And you can see we are right there in the mix of things as far as like last year and a little bit higher than what we were in 2020 and 2022. That's not unexpected based on this scenario. But let's take a look at a little bit closer look here at what our 7-day running average is. So we had 1,431 homes coming on market, and we still had 1,380 going off market, again, with 1,271 homes that actually sold. And that's super important because, again, you can see that our numbers are still running along really well. We have seen in the last 90 days, not 90 days, what am I saying? In the last 9 days, we have seen a significant bump in inventory. In fact, we actually hit higher numbers as far as available homes for sale versus what we have seen historically. In fact, those numbers look a little on the crazy side because as you take a look at the chart, let me open that up for you here. As we, we'll get to that one. Let's call back in. Let's crawl this back a little bit, as they say, and let's talk about pricing. All right. So even though our inventory has headed in an upward direction, the average price that is available for sale and the average price that has sold, okay, year to date and year over year, our numbers are pretty much spot on. We're still seeing a little bit of an uptick. In fact, let me blow this up for you. We're seeing a little bit of an uptick here, right? So the average sold year over year is up 2,000, or if we take a look at the same month in June, we're actually up $8,000 for the month. So we're still seeing that continuous gradual increase, not crazy, but gradual increase. And that is super important because as we continue to see those prices continue to rise, even though we're seeing a slight slowing nationally on our pendant sales, ours are going to be a little bit different. We're a little bit unique of a market. In fact, one of the top 5 sweet spots across the United States. We're still seeing that median price continue to increase. We've seen that all year long. New construction, a little bit different as they also adjust as far as market share versus, the new construction versus resale type homes or homes that are used and back on the market. Okay, so when we come in and then we take a look at what's actually happening here, the number looks absolutely phenomenal, right? When we look at it, it's like 33%. Holy mackerel. Look at that big jump. We have 9,000 homes available last year. We got 12,000. That's, basically 3,000 additional homes that are for sale. And if we actually blow this up a little bit more, you might say, oh my gosh, that's incredible. What's happening? Well, what's happening is that we're starting to see some of those sellers now breaking free because interest rates are becoming a little bit more inviting. Even though on Friday, they bumped up a little bit, they've actually been staying pretty close in the 6s, and there's some incentives there. But the funny thing is, we're also now heading into what's going to be considered a slightly busier market. So perfect timing for some of these guys, although I probably would have recommended waiting until after the 4th of July. But nonetheless, they're still going to be moving forward and getting a lot of buyer activity out there between now and the mid-August. So Pricing still number one. That is still the first impression of what is a buyer is going to see, and are they going to give you the go or no go as far as looking at a home. All right, when we move on, we take a look at what we call our Northwest MLS and the new construction and where we're going to be with this. What's super interesting, okay? Yes, we're still seeing the blowout. We're still seeing quick move-in benefits. What's super interesting, let me blow this one up for you. This is heading in a positive direction the last couple of weeks. Because remember, before, we were seeing some of our numbers on a monthly level that actually were down, month over month for the same year, $35,000. Now we're up $10,000. So we did a $43,000 swing. Now, as far as the average home that sold in, the year to date, that hasn't changed. So the market actually started to catch back up again. And that's super interesting because when we take a look at our numbers here, look, we're actually, looking at about a 6.26% of the market. Now, you might say, what are you talking about? Okay, so normally new construction inventory is about 11% of the gross inventory that's available. Well, they actually went from 11%, they went to like 30%, 35%. Whoop, now they're down to 6% because we have more homes that came on by resellers, okay? Average people put their home on the market, and we took a significant increase. So the buyers out there are going, wait a second, I don't have to spend that 10% to get that new construction premium. I can buy one of these other updated homes or better price homes. And that's exactly what they're doing. And we are still seeing massive velocity with our market as the rates continue to stay a little bit more steady. Yes, they came up on Friday a little bit, and probably by Tuesday, they'll head back down into the sixes, which is, again, normal for our area. Okay, so understand, if we take a look at mortgages over the period of like 50 or so years, really, mid to high sixes, super low sevens, that is situation normal and allows us to really maintain a balanced economy as far as with mortgage rates in that sense, as far as banks making their profit, the Feds being able to pay debt, things like that. All right. Not to get huge into, economics there, but let's continue on. So if we take and we blow up our numbers, we can see that we're only 178 homes off year to date, which is pretty small. Pretty small, even though it says it's 3.5% down, pretty small. Month over month, we're actually doing super well, okay? Our pricing is up. Everything is doing well on the big scheme of things, which then leads us right into the REOs. Yeah, we still have a lot of folks on the wall of shame. Yes, we do let them know. Some do change. And then, of course, we get some new contenders that like to be on the wall of shame. Nonetheless, our numbers actually are super, super, super low. We are not seeing many foreclosures at all. If we pop this back open and we just blow this up, we actually only have 44 throughout the entire Northwest MLS. Single family homes only. We have 44 homes. And you might say, wow, George, that's 44. That's still quite a few. That's peanuts. That is like nothing. That's half, 3/4 of Washington State. We're actually only at about 14%, and we're down year over year. And all of our numbers then accordingly adjust as such. So really, at the end of the day, listen, if you're thinking foreclosure is a great idea and a great investment, there's not enough. Banks are getting market value for them. It is what it is, all right? As far as if you're looking at, hey, where can I find a great deal? Right now is a really great time, especially if you're looking at new construction. It is month end. If you're looking for existing, hey, look at fixers. There's a lot of different options out there for you to find that perceived really good value, in which there's a ton of homes out there. make sure that you're looking at all different options and understand what is a good value to you. And sometimes it's home, sometimes it's location, sometimes it's price. Maybe it's a combination of those. All right, make sure that you're really having that solid discussion with the real estate broker that you're working with. In the meantime, it's a little cloudy today. It's still super warm outside. Have an absolutely fabulous last weekend in June. And I will see you on the next video. Oh, one thing that's super important. Hang on a second. Let's come back over here. What do we want to make sure that we do? We want to smash that subscribe button, share and like that video with a couple of people that you do like and one person you don't. And again, have a great weekend. I will see you guys later. Take care.